Good morning, everyone. Welcome to our Thursday morning trading session. The markets just opened up, and it looks like they opened maybe with a slight gap higher from where they left off. Let's take a look here at the NASDAQ. So the NASDAQ finished the session down here. The overnight saw a little bit of a rally. This is the London Open. We had a late filter entry signal. The market rallied up, came back down, and now is kind of stuck between this median line and the resistance just above it. So this is actually going to look like a little bit of an opening gap because the market did drift a little higher through the overnight. We'll see whether or not that puts some selling pressure on the market or if the buyers are just going to keep buying. All right, I'm also watching soybeans or crude oil, and right now there's not much going on in either of those. It's just the opening minutes, of course, trying to get a handle on what the market is doing this morning. So we'll just wait them out for a little bit. Perhaps the Eagle will give us a better look. Well, here, according to the Eagle, we certainly seem to be wedging up a little bit, don't we? A little bit of a breakdown there. So we'll see if we come back with a sell signal here. This will actually be our rule of three. I wonder if I should give that a poke early. Let's see, can I cover it up there? Yes, I can. So you know what? I will. So this is a little bit more aggressive posture. And what I'm going to do is I'm going to hold my stop up here. And essentially, what we were looking at was a little bit of a wedge like this. We had the test of the extreme being right here, right? So we're just looking at the market short term now. We've actually had several tests of the extreme. We had a big move here, and then we had this test of the extreme being the high way up here. And then from here, the market headed lower. And we actually had a test of the extreme to the downside. And a subsequent failure and a move higher. Well, here, where we're at right here, this is showing us that the sellers are taking control of the market. How do I know that? Well, the sellers keep putting in lower highs. And they've actually managed to break out. Well, they broke out of the trading range. They haven't really broken out through the lows yet. That'll be the biggie. If we can take out this low, if we can force the sellers, or pardon me, the buyers, to give up that low, we should see the market at least retreat down here and retest these lows. Now it's more aggressive, of course, because we haven't really taken out these lows yet. The market could swing higher again, retest the highs here, which is why I'm trying to hold my stop back a little bit further. But we did get our rule of three. We have one, actually turned out to be a rule of four, but 1, 2, 3 signals against the hard edge. So they occurred right here. 1, 2, and this is the third one. And you could make a case that this third one occurred just as the market was turning over. We do have a fourth one right there. But these two occurred so close together, I probably would consider them to be the same. At any rate, we had the all-important test of the extreme beforehand, before we committed to our rule of 3. So now we'll see. This low right here is the biggie. That's the one that's going to make all the difference. And we're getting a comparable signal here on the hawk. We're getting our first micro-macro cross signal. This one I'll set up to take below the low. And maybe I'll put a runner in, seeing how the hawk is allowing me more than one position. And here too, I'm going to hold my stops for a moment. So a little bit aggressive, but we'll see. If we can take out that low, we should be in good shape. Good morning, Jim. Jim says the advanced decline, let's see, it started at 1250 versus 700, so that's about 550 positive. And then we went to 1380, almost 1400 and 800, so that's about 600 to the positive. So the advanced decline, a little bit on the bullish side, actually. All right, now they're starting to fail. And I think I'll leave my break-even trigger in. Oh, they slipped us a tick again. All right, time to get a little bit more aggressive with my stops. The advanced decline seems to be evening out a little bit. Wow, that was sort of a crazy move. And I think I'll be bringing this one to break even now also. If it fails at this point, it's probably as good a place as any to get out. So what we're seeing now is we're seeing the buying pressure, not only from here, but also early buying pressure from down here. Now, I think this has given us a definite bearish flavor on the day. We've taken out this support zone here. We know that we can expect 2 moves in the direction of the breakout. So this is move number 1. I'm hoping that I can ride this one out. And then we'll look for opportunity number 2. Here we go, getting warmer. Well, we had comparable signals here on the Raptor, and a nice sell signal here on the Raptor, and again here on the Falcon. Had a good sell signal right here. Come on, NQ, don't stop now. You started off so well. There we go. There we go. Come on, get down there. Oh, they're just about to kiss the profit target. John is asking, Eric, when you get a chance, could you remind us of your schedule next week? Yes. Next week, we're going to take a little bit of a break from the trading room until, I think it's July 13, we're going to resume. The first week of July is not the best week to be trading anyhow, so I'm going to take that week off. Adam's got a couple of projects that he wants me to work on, so I'm going to do those. And so the trading room is going to be closed for the next few weeks as of this Friday. Friday will be our last session, and then we're going to take a few weeks to recharge the batteries and get a few other things done. Okay, I'm going to start getting really aggressive now with my stop strategy. You see how we're there we go. You see how we had this little swing through here? There we go. How we had this little hesitation in the market fighting? Well, if they failed once more and went higher, then the sellers had definitely lost control of the market. So good time to exit that trade. Fortunately, the sellers did not lose control. They pushed the market a little bit lower and we managed to hit our profit target. Hooray for us. All right, so we're still getting that whole test retest thing that we look for. Now that they've broken through those lows, we're going to look for that retest and an opportunity to perhaps short it one more time. Oh, speaking of shorting one more time, here's crude oil. And they're coming back with more signals, more sell signals. Now, notice these lows here. These are problematic, right? We could enter right here. 1, 2, 3, 4. I got to give up a fair amount here to enter below the lows, but can I cover above there? No. Doggone, crude oil so darn expensive. I don't think it's safe entering within this range. Crude oil has seemed to set up a little bit of a trading range that's looking something like this. So if you're going to short, I think you're better off selling once we get below the lows. Can I cover to the hard edge? I can't even cover to the hard edge. What's up with that? All right, let's, oh, you're kidding me. You guys. I can't even go with parabolics. Well, there's an opportunity in crude. I'm trying to figure out a way to get at it. Might have it a chance to do it in the Hawk or the Falcon, both of which are very sideways at the moment. So the Hawk just reinforcing what we've seen on the Eagle, namely that we're stuck in, well, the Hawk kind of paints it as two trading ranges. We have this trading range here, and then we have another trading range right here. And the trading ranges are easier to pick out when you focus on these yellow bars. So that's crude oil right now. Kay asks a great question. Isn't it too risky to trade on a Thursday since there are mostly many news items approaching the economic calendar? Yes. Let's take a look at the economic calendar. Let's take a look here. And now you don't have to go hunting around for an economic calendar anymore. Indicator Warehouse has actually made their own. So I'll shoot you guys the link. You can bookmark it. And you can check this out every morning. As you can see, there's lots of reports due. I suppose the initial jobless claims, oh yeah, that's today. Anyways, the question is it risky trading because of the pending reports? Yes, but the market does seem to factor in the reports beforehand. I guess what I'm trying to say in my rather awkward fashion is that we will get a signal regardless of what the report says, right? Like right now you can see our hawk starting to go a little bit sideways. If I didn't trade because of a report, I would probably have very few trading days. Of course, there's the whole mess with Greece still. And that's got to be, excuse me, weighing on the market. But short answer, no, I don't pay that much attention to the reports. I pay attention to what's going on the chart. And as many of you will attest, if it wasn't for you guys pointing out reports to me, I would very often be woefully ignorant of reports when they unfolded. Okay, we're going to get another chance here on we're getting a soft edge bounce here now on our Raptor. And essentially what I'm looking for is the opportunity to get the second leg of this move lower. Now it looks like it's going to develop into a double pullback into the hard edge, which is better. It would produce a stronger signal. Just trying to place a trend line on this market, and it's not really cooperating. All right, we can close that out. Oh, well done, Mark. Mark says, gotta love the first micro macro crossover. Just picked up 200 bucks on the E-mini on a single contract. Well done. That's a home run on the E-mini. Well done. So the first micro macro cross signal is this one right here. Although I suppose this one here occurred just as the macro line got into sync. So what we're looking for is here, this one's a little clearer. So we get our warning dot. Notice everything is in sync. Our micro line has crossed over the macro. Everything is in sync now. And there's our signal. So we would look at selling that signal. High probability signal. It has good follow through. Well, at least enough follow through to hit our high probability target. So here's one, here's one. Notice this one here. I don't know if that one reached our profit target or not. Oh, it got really close. Would have hit our break-even trigger or got close to hitting. No, should have hit our break-even trigger, but it ended up failing. Why did this buy signal fail? Well, unfortunately, the tools, as good as they are not 100%. I think there's a couple of things that might have been working against this particular signal right here. First off, the stronger first micro macro cross signals tend to develop a little sooner. Notice how this one rallied and then developed a signal up there. Now, it's not that it was really far away. It's just compare where this signal developed with where this signal developed. The other thing I think this second signal has against it is we're running into the highs. How do I know the market is going to fail at the highs this time? Well, I don't really know, but notice what happened before we developed this signal. We had a move lower, so low in fact that the bar color changed to red, and we started generating sell signals. So we had the market pay off to the short side, and now we're coming back with a buy signal. Does that mean I would not have taken this one? No, I probably would have taken it. I think I would have dialed down my risk amount on it, and I definitely would have run a big stop. So at least back here to the macro line, could I afford to do it way down there? No, I couldn't. So can I run it back to the macro line? Yes. And now I would hope to find that, oops, sorry. I would be looking for the buyers to come back into the market. So they filled me here. Let's say I did not have my break-even trigger going, and I'm still in this trade. I would be looking for this stage right here where the buyers show up and tell me, okay, it's time to start rolling your stop. So I would keep rolling my stop now. The market eventually would reverse and take me out, but my risk or my loss should be, it looks like if I'm going with my bar high low or something like that, something more aggressive, my loss would probably be in the neighborhood of around $100. Looks like we're about halfway. So even though it did turn out to be a losing trade, it would not have been a devastating trade. It was a valid signal. There was every reason to suspect it should go higher, but there were a couple of clues suggesting maybe there could be problems. The signal developed a little bit late, developed a little bit close to the high, which would be the extreme, right? So essentially what we ended up doing here was a test of the extreme, and we fired a first micro macro cross signal. And then the last clue, which has some strength to it, albeit it isn't, something that's going to be 100% accurate, is that we got into red bars, we started producing red signals, sell signals, and profitable signals at that. It would have been a tough one though. Okay, Kay's asking, how do I know whether it is, how can I verify if it is a pullback or break through the soft edge or the hard edge? Okay, that's an excellent question. I'm trying to figure out an easy way for you to judge. Is it on all the tools, or are you just looking at the Raptor? I want to make sure I point you in the right direction. Okay, Kay says I'm using the Hawk, Falcon, and Eagle. All right. This is going to apply to the Raptor also, so it's not unique. Our signals always, we have various signals, and we have signals which are what we deem to be higher probability signals, and those signals which we consider to be lower probability signals. We'll start with the Eagle. If you're going to focus on your high probability signals, we're going to be looking at things like a hard edge bounce or I got to go back here a little bit to find one. The darn NQ has been so choppy of late. Here we go. We're going to be looking at things like a green bar sell. This is a high probability signal. We're going to be focusing things like the red bar buy, which is a high probability signal. We're going to be looking for selling opportunities, or better selling opportunities are going to come off of the hard edge than ones that are developing down here toward the soft edge or coming out of the soft edge. Obviously, that's not to say that these signals can't work out, but it does say that if you're looking for high probability trades, the ones that are going to develop off of the hard edge are going to be your better chances. So when you see a signal develop, down here, let's go with this one right here. So when you see a signal develop down here, it's more likely that it could develop into a pullback than if the signal develops off of the hard edge. I'm a big proponent of drawing trend lines, even if you can't draw what you think to be a reasonable trend line, I think you should still put a trend line on your chart, even if it ends up looking something like that. And sometimes I think the opposite trend line is actually the more important one. So you know how in an uptrend, we tend to draw trend lines across the bottom, and in a downtrend, we draw trend lines across the top? Well, I almost think the opposite trend line is more important, where in an uptrend, we draw a trend line across the highs, and in a downtrend, we draw a trend line below the lows. Why? Well, because you immediately see when the market is starting to lose some steam. And if I drew a trend line across the highs, or I suppose I have to adjust this a little bit because those highs wouldn't be there yet. But let's say I had a couple of points like this and I shot a trend line across here. I see how the trend line or the market overextends itself, and then it starts to get shallow. This breakthrough here, this overshoot, by the way, this overshooting of the trend line right here is actually bearish. You would think that it would be a bullish sign, but it's actually bearish. Now, I don't mind if you adjust your trend line a little bit as the trade develops, but I don't think you should make too many adjustments to your trend line because you're going to miss something like this overshoot right here. But notice too how the trend line starts to show you that the market is getting a little bit shallow. So even though we're producing red bar buys, even though this is a high probability signal, in the back of my mind I'm starting to think, that was a trend line overshoot. I wonder if this market is starting to slow. Now at this stage here, there's no way to know that. But we still have enough room through here that we could profit on a move higher, right? It's not like the signal developed way up here. Where the signal developed, I still have time to get into this trade. And look at where I'm covering the trade. I'm trying to cover the trade back to the hard edge. Why is that? Well, if the trade brings me in and drifts to the hard edge, which I know, oh, doggone it, sorry, and drifts back to the hard edge, which I know is a very real possibility, I don't want to get stopped out before it has a chance to reach my profit target. Now in this case, everything worked out just fine, but notice here how we're getting more and more withdrawn from the trend line, right? The trend is definitely flattening out. So then when I'm producing these buy signals up here, I should be a little bit suspect, right? I should be thinking, well, this market is losing a lot of upward momentum. That's not to say it can't go higher, but if it's going to go higher, I'm going to get one of these. I'm going to get a breakout, I'm going to get a retest, and then I'm going to get another buying opportunity. So whereas the red bar buy, the hard edge bounce, these would be higher probability signals to take, I wouldn't be as keen to take these green buy signals, even though they are in sync, even though they are coming off of the hard edge, which generally shows momentum. I would be less aggressive on those given the overall market picture. Now, the market started going flat because it was the end of the trading day, but this will happen even during the session. Now, we have another high probability setup in that we've had our test of the extreme and it looks like we're failing. So now the band is turning over and now we're looking for a sell signal to develop. All right, we get a sell signal right here. Is this a valid sell signal? Well, yes, it is. It's actually one of our higher probability signals because it's our first with trend signal. If you haven't noticed, each of the tools, regardless of whether it's the Raptor, the Hawk, the Falcon, or the Eagle, the first with trend signal tends to carry some strength to it, especially if it's been preceded by a test of the extreme and a failure. Now I know somebody's going to write me and say, Eric, this is actually the high here, not this one back here. So this test of the extreme actually broke the extreme price, which was back here. Yes, you are absolutely correct. But what does it show us? It showed us a market that came to the highs and failed. Right? If it broke out the highs, if the buyers still had control here, the market should be heading higher, shouldn't it? But instead, the opposite happened. It started heading lower, and now we are testing the lows. All right, so here now we have our sell signal. So there's my sell signal. I should try to cover it as deep as I can. And the reason I want to do that is in case this market is actually becoming range bound and I haven't recognized it yet. There is a possibility that the market could bounce from here because it isn't the perfect setup, right? It isn't the ideal setup where the market comes up, comes down, gives us a test of the extreme, heads lower, gives us the retest, and then comes back with a sell signal, right? This is the textbook. This is real life. This is actually doing this, but it's doing it in a rather sloppy fashion. So we've had the test of the extreme, we've had the breakout, we've had the retest, but right now at this stage, it's not entirely clear whether the market is going to drift back into the trading zone, try it all over again, or what's going to happen. But it is doing this thing right here. So now we have to look at protecting ourselves. Well, we can take it on the hash mark or we can take it below the low. It's only a tick. Chances are if we fill at the hash mark, we'll fill at the low. The more crucial component here is where are we going to place our stop? You can say, well, I'll place my stop at the hard edge because if the market retraces to the hard edge, a hard edge bounce is good, right? Yes, but this is all still very tight, right? The market is just beginning to change trend. If there's going to be a bigger reaction, you're going to get stopped out before you even have a chance to realize profit. So I start looking for alternatives. I try above the high, I couldn't afford it. Maybe if I try above this swing high right here. Nope, can't afford that. What if I do it kind of the halfway point? Okay, that I can afford. And this sort of gives me some staying power, gives me hopefully a chance to ride it out. Now notice it's at the soft edge here. There is a chance that it is going to retreat to the hard edge. And look at that, there it is at the hard edge. And now we produce a green bar sell. We're on the hard edge, we produce a green bar sell. This is a high probability signal. And in actual fact, it almost looks like we've gotten a slightly better retest here. So now we are in this phase right here. We're back, we're retesting the support. Remember, these numbers are not carved in stone, they are fluid. If the market fudges it by a little bit, that's okay. So we had this signal develop near the soft edge. It was a high probability signal, but at the same time, we knew that there was a chance it could retrace to the hard edge, which it has done. Now we actually have a higher probability signal. So had we not entered here, we could look to enter here. And now can I cover above the high? Nope, still can't. So I could still look at covering above this little swing high. Yes, I can do that. So now we have a higher probability setup. We're at the hard edge. And yes, many times I will wait for the ATR to flip over. I'm just doing this for illustration purposes now. Oh, doggone it, Eric. My mouse keeps moving over and I moved the screen too far. I apologize. So here we are, retrace to the hard edge, and the market just kisses our profit target. We probably would not have been filled. And now we come back to the hard edge again. Now we're bouncing off of the hard edge. This is also a high probability signal, not as high a probability signal as the green bar sell. The green bar sell is actually stronger. And there we go. We finally hit our profit objective. So now here we are with another sell signal, but this is coming off of the soft edge. Is it a valid sell signal? Yes, it is. Is it a high probability sell signal? Well, no, maybe not. If I start throwing a trend line down here, we'll immediately see why. It hits the trend line and starts to reverse. So if I were to take this signal, I would probably feel better about looking for a second push on the entry. So there it engages the trend line. There's the reaction. Now I can set up for my second push. Don't be afraid that if you take the trend line into consideration and the market tumbles and you get left out of the trade, don't beat yourself up about that. Because you're going to have an opportunity on the Hawk, you're going to have an opportunity on the Falcon, the Raptor if you own it. It's very unlikely the market will ever bolt on you without giving you an opportunity in at least one of the tools. Can it happen? Definitely. It's happened to me lots of times. I'm sure it won't be the last time. You know, it's just one of those things that occurs in trading. But in my book, it's better to miss an opportunity than to get stuck in a bad one. So here we have a signal generating off of the soft edge, and then we come back to the hard edge. So this now would be our higher probability signal than the one here. Notice, however, that the signal itself generated in more or less the same place. This one would be a little easier to cover. You'd save a few dollars on your stop. And there you go. So that's the eagle. And here we are with the same type of scenario where when we had this signal print up here, where it's off of the hard edge, we had the test of the extreme. It's the first signal with trend. That one had some good follow through, but look at what happens when the signals print down here. We're on the soft edge. Is it a valid signal? Yes, definitely. Is it a high probability signal? No, not so much. Can you take this signal? Sure, but where are you going to place your stop, knowing that it may retrace to the hard edge? Knowing that, you know, your last swing high is up here at 37, and that's a minor one. Your major swing high is up here at 44, 45. Can you cover that? No, it's too far away. So do you pass on the trade? Do you take the trade regardless? Like, do you go into manual mode and say, I'm taking that trade anyway, and put $500 at risk? Now remember, it's just initial risk, right? You should have an opportunity to adjust your trade. The sellers somewhere here have got to step up and push the market down. They're not going to let it go entirely. But those are considerations. I try to hold out for the higher probability signal if I can. You know, I should have a trend line across here. If this market retraces up here to 45, 35, 36 and starts to look bearish, I may not get a signal here on the eagle because it may have drifted too high, but definitely I could be looking at a signal on the hawk or the falcon. All right, let's go now to the hawk or falcon. The hawk or falcon tend to be a little bit easier because they tend to produce signals in a more timely manner than the eagle. And here too, what we want to focus on are our high probability signals, namely things like the trend change signal, where the trend line changes color. We have our little down segment that changes the trend line. We have the up, we come back with the down, we print a signal, high probability signal. We have our early trend change signal. This is not a high probability signal, but it is tradable if you are, you know, feeling okay, the market is more bullish, or I'm getting a bounce off of the median line, or for whatever reason you want to take it. The early trend change signal develops just as the trend line is turning over. Notice our filter is in sync. Our trend line is turning over, but we still have, here's the key. We have this little up, down, up pattern, a miniature test of the extreme. Now that one had some decent follow through to it. Here is a trend change signal to the downside. All right, we have our down, we have our up, we have our down. Should I take this signal? Well, yes, I would take this signal. However, you can't trade these things in isolation. You need to look at the overall context of what's been going on. So we've had a market which has been in a sideways range back here. It broke out and it got bullish. Right? It took a fair amount of effort on the part of the buyers to get the market out of here. And now we're producing a sell signal. Now it's a high probability signal, so I should take it, right? I shouldn't second guess the programming too much, but the signal is against the dominant trend. There's very likely to be some support as we get back down to this area here. So what do? Well, I take steps to protect myself. I dial down my risk amount a little bit. So let's say I'm only going to risk 1% of my trading capital. I try to risk the trade as far back as I can. Okay, I can't do it on that one. So maybe I can risk it to the bend here in the trend line. That's also a pretty good spot. And you can see it's also near our secondary resistance line. But as far as the probabilities of this trade working out go, oh, and you can see my profit target is just near this old area of resistance. So that's encouraging. You know, it's not like my entry is here, my support or resistance area is right here, and I got to go way down there for my profit objective. That would give me pause. But the fact that I have a chance to reach my profit objective before we encounter all this old resistance, that's probably a good sign. So here we are, we're in on the hash mark. We're going to cover up here. We're going to try to get profit before we run into this whole mess. And once the trade starts in my favor, probably right about here, I'm going to start getting more aggressive with my stop because I'm going to anticipate the buyers showing up sometime. So I'm going to start bringing my stop in, maybe going with the bar high-low, just keeping my stop very, very handy. And depending how high they go here, there we go, we finally hit our profit objective. Now notice this next signal that prints. Essentially, this signal that's printing right here is what we call a trend line touch signal or a continuation signal. Did it touch the trend line? No, not really. That is a little problematic because if it produces away from the trend line, there is going to be a tendency to pull back into the trend line. But we're producing a signal here. Is it a high probability signal? No, not really. Why? Well, because we have that little gap from the trend line and we've encountered this old area of resistance, which should now be support. And sure enough, the market dips into it and then starts going the other way. So even though some of the signals will be high probability signals, as I said, you cannot trade them in total isolation. You have to look at them in the context of what the market's been doing and where it might be going next. The late filter entry signal, very, very, very strong signal on your Falcon. Trend line does not go out of sync. Filter does go out of sync. When everything comes back into sync, very high probability signal. This might be the only signal that I would ignore what's been going on before. Like if you really want to dumb it down, if you want to keep it super simple, just say I'm going to take every late filter entry signal. Now you should know that the late filter entries are like the macro pullbacks in the hawk and the red bar buy, green bar sells in the eagle. We can't see too many of them within a trend, right? 1 or 2 within a trend is acceptable. When I start to see 3 and 4, I don't think I've ever seen 5 develop in a trend, but you get the point. The more you have developing, the less likely the signal will actually work out. So this is the first one to the upside. It's our trend change signal, also happens to be a late filter entry signal. Here's a signal you could take with a great deal of confidence. And you can see that it had no problem getting up there and hitting our profit target. Here's a late filter entry to the downside. These two I would probably consider to be part of the same one, because the signal tripped back here but didn't really go anywhere and then produced another one and then went lower. Notice, however, this late filter entry signal, still a high probability signal, this one right here, see? But it didn't have the follow through. Why? Well, because the market had been in a serious decline, and I bet you those lows are pretty significant also. Yeah. So there we go. Right. So you need to, like I said, you need to consider these things in the context of the overall market. Even though when I get a high probability signal, like here, we had a late filter entry and a trend change signal combined again, and it seems to have had a nice progression. All right, and then lastly, the hawk. We go over the hawk a lot. I'll keep this quick. We're looking at things like first micro-macro cross signals. We're looking at things like macro pullback signals. 4 arrow consolidations, which I don't see one here right now. Red bar buys. Green bar sells. Those are the signals we're focusing on. Here's another first micro-macro cross right here. But here too, you want to keep some idea as to the market context. Let me see, let me go back here a couple of days when things were really messy. There we go. So here we go. We've got lots of yellow bars. The market obviously stuck sideways. Oh, and we get a first micro-macro cross signal. Should I take it? Well, I could. But again, it's, you know, the market is obviously sideways. Lots of yellow bars, Filter is a total mess. It's a first micro-macro cross signal. If I'm going to take it, I'm going to have to cover it very deep because at this stage, the market is still stuck in the trading range. So, okay, so at this stage, the market is still stuck in the trading range. I need to protect myself. And you can see we've taken a whole lot of heat before we finally, oh, still loads of heat. Oh, and here we're producing another first micro-macro cross. After a couple of pokes through the top end of the trading range, we're starting to make higher lows. This is starting to look a little bit more promising now. And we finally get to our profit objective. But you can see the signal worked out, right? This one way back here, it did work out. However, we really had to give this trade a lot of leeway given the current market condition. So even though it's a high probability signal, I would not simply go in and say, oh, first micro macro cross. Well, I'll buy it here, I'll cover it right here, and that'll be that. Yeah, that'll be that. It'll bring you in, it'll stop you out. Or did they? Oh no, you might have been able to ride that out. It would have been a little scary until it finally got up there. So that's about the best way to judge. It's impossible to say what the market will do next. We all have our guesses, but it's really impossible to say the market's going to go higher, it's going to go lower. But if you're looking for certain things, if you're looking for high probability setups, high probability signals, if you're looking at the market and saying, it's made a test of the extreme there, and it looks like it's broken down through the bottom here, and oh look, I have a rule of 3. Okay, sure, we'll take a poke at this. Everything is in sync. Can I cover it above the swing high in case the market reverses some more? Yes, I can. And away you go. I suppose the other thing you can do is if you look at your signals and you look at your high probability profit targets, a lot of times the market will start to reverse after hitting its high probability target. So if the market had not hit my high probability target here and then started to reverse back into the hard edge and then came out and produced another sell signal right here, that sell signal would have a little more validity to it because the market had not reached my hard edge yet. Or, sorry, I'm trying to do two things at once here. The signal would have a little bit more validity. Oh, no, it's ticking me off. The signal would have a little more validity to it because we hadn't reached our high probability profit target yet. in which case you could perhaps look at taking that one. It's not obviously to say the market has to hit our high probability target, but that it will have a tendency to do so. And once it reaches the high probability target, a lot of times we're going to see some sort of reaction. Which is, I guess, where we're at right now. I'll shoot that trend line back across those highs. Okay, Michelle is asking exactly about this sell signal down here. The sell signal on the eagle. Now, I still expect the market to head lower because we've broken the support. The market owes us 2 moves in the direction of the breakout. But as we've just been talking about, we're signaling off of the soft edge. Is it a valid signal? Yes, it is. Is it a high probability signal? No, it's not. Because there's a very real possibility it's going to pull back into the hard edge here. See, did it bounce off the trend line? No, it bounced a little early. Okay, so now it's retreated into the hard edge. Somewhere around here I would be expecting another sell signal. Right about now I'd be thinking, okay, green bar sell. Come on, green bar sell. Oh, and there we go. We're working on our green bar sell. Wow, our advanced decline actually flipping over. Jim says we're about a negative 200 now, which I would suspect. Kay's asking, is there a way to change the color on the bars instead of yellow bars? Yep. Go to your indicators, and this is true for the Raptor also. Go to your tool, your hawk, and you see here bar coloring where it says no direction. You can change it to whatever color you want. And then just click apply and OK, and you'll have your new colors. So you can make them purple or blue or whatever you want. Frank asked a good question. If you placed your entry above previous resistance, would you have a better chance? Well, yes and no. Here's the problem with placing your entry. No, the Raptor's not going to be a good example. Oh, here we go. We're getting a Raptor signal actually. There we go. So this is a failed buy signal. So essentially I'm pulling it off of the eagle also. Here on the eagle you can see we've got our green bar sell. The ATR has not flipped over yet. I would use that next bar. I'd probably try to cover it above there. Looking for the sellers to try to get their act together now. Okay, so Frank was asking, are we better off buying above the next resistance level? Sometimes yes, sometimes no. And I know I hate giving answers like that because it doesn't help you very much. Here's a first micro macro cross signal. We're getting the warning dot. We've got the triangle and the hash mark. There's no point in entering above the resistance on this one because my profit target is at the high. So I'm essentially giving up the whole trade before I even get entry, right? So in that case, no, it makes no sense to enter above the resistance. If you're looking at a signal like, well, this isn't a true signal, but we'll use it as an example anyhow. If you're looking at a signal like this, where in order to enter above the high, I only need to risk 1, 2, 3 ticks, well, that makes more sense. I'm giving up 3 ticks. It's not a big deal. I'm not making the market work that much harder to get to my profit objective. But remember, for every tick you make the market wait, you are going to make it work that much harder. So in this instance, yes, I think it's prudent to enter above the high or above the resistance because I'm not having to give up too much in way of profit. And you can see it would have kept you out of a little bit of trouble. But this next one here where the logistics don't make sense. But here too, you know, if we're waiting for our high probability signal, well, we had the first micro macro cross. The next signal was not a high probability signal, so we can disregard it. Here's a first micro macro cross right here. And when this one was printing, quite honestly, I would have been wondering, are we going to see more of a test of the high? So here too, it becomes a logistical matter. If I enter here and cover, say, up here, okay, I can't do that. Let me go back to 2%. If I enter here and cover up here, you can see that once again, I'm having to give up almost all my profit if I were to delay my entry below the low. The advantage to entering below the low is that you can probably get away with a slightly tighter stop. So if my entry below the support or the resistance area is, you know, 5 ticks or more, it makes no sense. I may as well take it on the hash mark, cover the trade as deep as I can, and if the market chooses to retreat against me, then at least I have some room to ride it out. You can see in this instance it wasn't a problem. The high probability signal still came through. Oh, Michelle says the green bar sell on the eagle just executed. Let's go take a look. Oh, and they're slipping us a tick again. Characteristic of the summer markets. right, let's see if we get some follow through. We're still within the larger range from this morning. You can see here if we take a look on our Raptor, you can see we're right in the middle of this morning's session. Okay, so we just hit our break-even trigger there. Hooray. And what are the parabolics looking like? Well, I may as well leave it as is. If we complete this next bar lower, we should hit our profit objective. Come on, boys, don't stop now. And girls. Okay, Michelle asks a good question. Eric, when you use your auto break even, how far into profit do you bring your stops into break even? And is it for one instrument identical for the Hawk, Falcon, and Eagle? Oh, the advanced decline is falling off at negative 500. Go Bears! Okay, so, for the break-even trigger on the Hawk, actually for all of them, I look anywhere from 60 to 80% of my target. So with the Hawk, because in most cases I'm running a 10-tick target, I have an 8-tick break even. With the Falcon, I have a 20-tick target and I have a 15-tick break even. With the Eagle, and I seem to have turned my break even off, I'll have to turn it back on. I have on the NQ, I have a 40-tick target and a 25-tick break even. The Raptor, by the way, would be the same as the Falcon. I would have a 15-tick break even. So my logic is if the market gets about 3/4 of the way to its target and doesn't follow through, then break even is probably a good place to be. That's my rule of thumb anyway. Sometimes it works, sometimes it doesn't. And you know, at the end of the day, you should always let your pocketbook be your guide. Like the market's being difficult today. It was flashing $100 there. $100 is nothing to sneeze at, right? It's like the old sidewalk trick. If I'm walking down the sidewalk and I see $100 there, am I going to stop and pick it up? Probably. See, so there's 110. I punched out $100 in the bank. No guarantees the market's going to go lower to my profit objective, which was right here, by the way. I'm going to share a very interesting story with you. Some of you will have heard this before, and I hope that it helps you and doesn't pain you because some people I tell this story to can't believe it. A little while ago, I met a fellow day trader. It was purely coincidental. I had no idea this person was a day trader, but I could tell from the multiple screens and the literature and so on that this person was a day trader. And now they actually weren't a day trader in the sense that we day trade. This person was really more of a position trader, but I guess he considered himself a day trader because he looked at the markets during the day instead of at the end of the day. And he wouldn't spend all that much time looking at the markets either. And this person, they trade for other people. What makes this person unusual, being a trader, you like to share ideas. You like to say, oh, well, how do you trade, this, that, and the other thing? What do you use for a signal, and so on? Well, this person traded solely on feeling. And no, I'm not joking. If he felt like the market was going higher, he would buy. If he felt like the market was going lower, he would sell. But here was the big test, which I found most interesting. It wasn't that this person obviously had a good entry signal. They didn't. But this person had impeccable money management skills. Amazing money management skills. Our little scenario here with the Raptor that we were just looking at, where the market is hovering just above our profit objective, or we have a chance to punch out with $100. He tells his clients, or he asks his clients, what would you prefer? Would you prefer that if I'm in a trade that has the possibility of making $200, I hold onto that trade? Or if that trade has $50 guaranteed, would you rather I take the $50? Most people say, I would rather you hold out for the 200. Now, this person says that's wrong. This person says the correct answer is I would take the $50. I would take the guaranteed money. Even though it's only $50, even though that $50 may eventually become $200. It's not $200 until it's in your bank, right? The only amount you're guaranteed is what you can leave the market with. And I thought that was extremely astute. I don't have much use for traders who trade by their gut. Well, I shouldn't say it like that. This person is a wonderful person, but you know what I'm saying. I'm more of a technical trader. I like to look at the market. I like to look at the price flow. I like to try to get a handle on who is controlling the market, the buyers or sellers, and then trade accordingly. But it's so true. Would we be further ahead had we not taken our profit? Remember, this is what our trade was looking like. We were hovering just above our profit objective, which was this yellow line right here. We were short from right here. Are we better off waiting, or are we better off taking the profit we had? Well, right now it's looking like a pretty good call that we punched out with the profit that we had, doesn't it? But I thought that was very astute. And I think it's a very valuable lesson, and one that we all need to learn as traders. First off, there's the scenario where you have to be able to afford what you're risking. You have to give the trade a reasonable chance to work out. But at the same time, there's that balancing act where, okay, if I have $100 laying on the sidewalk, am I going to stop and pick it up? Or am I going to keep walking and see if I can find two $100 bills? Yeah, Jim says the DAX is trying to rally. I sense that. The NQ not giving it up quite as I had hoped. Last thing I want is to be moving into some sideways trading now. Hopefully we'll see the sellers step up here in a moment, knock them back down. Otherwise, I'm going to get very aggressive with my stop. And unfortunately, this is kind of typical of summer trading, where we see a lot of this sideways congestion. If they commit to a direction, they're always slow doing it. It's not like at the beginning of the year or during the spring where the markets tend to be very active. And of course, we can't make the market do anything. All we can do is try to take advantage of what it is doing. Soybeans put in a nice rally this morning. Should have been paying more attention to the soybean market. So they opened here, produced a buy signal. So here's a signal. Again, it's off of the soft edge. But if we look at the overall market context, it does look like we've maybe tested the extreme and might be heading higher. Now at this stage, it's very difficult to tell because the market may just end up going within a larger trading range, right? There is that very real possibility. In this instance, I would probably wait for the market to flip over the ATR. You'll notice that we're currently against the ATR, which I'll use sometimes as a filter. This is a higher probability signal because it's our first signal that developed after a trend change. But here too, there's a very real possibility the market may try to retreat to the hard edge. So I'm going to have to run a stop at least back to the hard edge. Or I can let it flip the ATR. Again, I still have to cover deep as I can. If I can cover it way below the swing low, I'll do that. At the very least, I should try to cover back to the hard edge somewhere in case the market retraces and is going to retest this zone. Remember, we get those breakouts, we get those retests. So here comes the retest. And voila. So a nice move of soybeans right out of the gate. Makes me wish I'd taken that one. Did you notice, by the way, the retest was right here? Then we came back with another soft edge signal, but because it was that retest, I suppose we could have a little bit more confidence in it. Even so, the ATR flips. There's the signal. I would still be covering to the hard edge. I probably would be trying to cover below that swing low, at the very least to the hard edge. And if you took the signal late, then you'd still be working the trade with your stops hopefully up here somewhere, and maybe even considering taking some profit. Soybeans, again, a market that I tend to double the profit objective on. Here's a little something to note also. When you take the first signal, when you take the signal early, it's much easier to hit your profit target. When you start taking later signals, you may need to adjust your profit objective somewhat in order to let the market get to your profit objective, right? There's no point in doubling your profit target if the market is already well into a trend, if it seems to be coming up a little bit shallow. I would not consider this an overshoot, not yet anyway. If the market shallows out now, if it comes up and then starts going lower, then yes, I would consider that an overshoot, and maybe we're looking at a possible reversal. But for the most part, the trend is up. It's obviously paying off to the upside. Here's another signal. Is this a high probability signal? No, it's not. If it gets back to the hard edge and produces a red bar buy, then yes, that'll be a high probability signal. Can I take this signal? Sure. It's your money, you can do whatever you want, but where am I going to cover this trade, right? At the very least, I need to cover it back to the hard edge. And I'm really kind of asking for it, because if the market comes in, brings me in, and now starts to retreat to the hard edge, I really got to hope that my stop is deep enough. I suppose the other thing you could do off of these soft edge signals, I haven't considered this before, but let's assume for a moment that this bar is going to finish lower. Well, then we know our intermediate limit, don't we? And then we could use that to enter above the high with a little bit more confidence. That would be a good way to capitalize on Frank's recommendation of entering above the resistance. Here, we'll do it in reverse. We'll do it down here. So here's the signal. It's off the hard edge, or soft edge, pardon me. Let the signal actually turn. Let's wait for that bar to turn, and then we'll place our entry. Now this is when the signal produces off of the soft edge, because we don't necessarily know. Here's a buy signal off of the soft edge. Let it turn. And now we know. Now we have the current limit of the market. In which case we could avoid something like that. So that might be, I'm going to play with that a little bit more. We'll see here, it's starting to turn over now. Whether or not, entering above that swing, this little intermediate swing, might be a better way to get into that trade. Yes, Michelle says the eagle printed a red bar buy. It did. Notice our band very, very flat. No directionality here whatsoever. I'm looking for the sellers to step up there somewhere. Jim is asking about the Raptor for the YM. Hmm. Yeah, they're definitely going a little bit sideways here. Might be getting a double pullback. So we'll see what happens when it encounters the hard edge here, if it comes out with a signal to sell. Really surprised the buyers are as strong as they are today. Jim says, is that a yellow bar buy sell? Are you looking at this setup right here, Jim, or this one over here? This is actually a little bit bullish here on the Raptor because we've had a test of the lows. We're trying to trade higher. This would be a soft edge buy. Kind of hanging on by our fingernails here at the moment. Crude oil has been very subdued this morning. Here's that bigger range that we were looking at. So nothing really going on in crude oil today. Had a nice trade out of the inventory. Had to give it a lot of room to move, but when it finally settled down, it ended up yielding a nice profit. I would have said crude would head lower, but if you take a look at a daily chart, actually we'll do that before we button things up here because I can't see too much else going on today right now. So if you look at crude on the daily chart, you can see this major congestion. The market winding itself very tight. This is actually kind of bullish. This is what a lot of market analysts refer to as accumulation, where the market starts to build buying pressure. So they're getting very close to a bullish break. So in spite of crude oil slipping lower the last few days, it does seem as though being a buyer in crude might be the better way to go. Yeah, we'll be back up to $100 a barrel before you know it. Jim is asking, what was that hash mark price? I'm assuming you're talking about the YM at 657. The buy was 179.14. Oh, and what is the low of the candle? Looks like 179.01. Unless you want the one beside it, which is 179.05. It's this one you're interested in. Okay. 179.06 is the hash mark. The low of the yellow candle, 178.93. The low of the blue candle, 178.90. Oh, sorry, did we lose audio again? Ugh, I apologize. So with the Geiger counter, it gives you a sense as to the order flow. It gives you a sense as to who is in control of the market. When we see these peaks here, there obviously is some strong buying, and then all of a sudden the buying fell off. According to the programmer, that's stop running. So we'll see. We're at a significant resistance area now. We'll see whether or not that actually runs into the market moving lower. Nope, not yet. The selling remained relatively steady, whereas the buying was increasing a little bit. So the Geiger counter is useful for helping you gauge if you want to get into a trade or if you're already into a trade, helping you determine whether you want to stay in that position. Helps give you a feel as to who is controlling the market, whether the buyers are in control or the sellers. And here comes crude oil on the Falcon with a late filter entry signal. Now this market has been so slow, I don't know whether I want to give that a go or not. In fact, maybe what I should do is I should dial down the risk on that. Just throw a onesie in it. It's not the most attractive looking trade. And I should be covering it up here. However, I'm not sure I can afford that. Let me try that again. Should be covering it above the swing high. Oh, I can. That'll give me a little bit more staying power. Yeah, crude definitely moving lower today, but almost reluctant to do so. See how we're getting a little bit shallow here? This is a very risky trade, even though it is a late filter entry signal. Part of my reluctance is the fact that the market came up short of the trend line. But it is a signal. DTS very often knows more than what I do. Well, the advanced decline is just about dead even, and that's explains all the sideways trading that we've been witnessing today. Well, that's not going to follow through. Not yet, anyway. If you are trading this afternoon, well, it looks like soybeans have started to move sideways, so there's no point worrying about them. I think they've made their move of the day. Crude oil, if it can get back this signal, may slip lower here to our bottom end of the trading range. The stock indices, I don't know, the NASDAQ, yeah, we had that breakout. Not a whole lot of follow through here either. I think they're going to be dragging their feet. I really do. I think they're going to be having a little moment, non-committal. I would still favor the short side. I would still favor the sellers over the buyers. Oh, speaking of the sellers, here comes the crude oil on the Eagle, also flashing us a warning dot. Well, I think we just filled our Falcon trade. Come on, get down there. This low right here is the real troublemaker. 59.50. Come on, crude. You can do it. There you go. Come on. Let's be like the crude oil we know you can be. Here we go. Come on. All right, well, they're going to bounce around a little bit, but it does look like they're going to give it a go. If this bar finishes lower, I'm going to get more aggressive with my stop, probably roll it above here. And with a little bit of luck, we should see the market fall off here and find our profit objective. Like I was saying, the stock indices, I'm still quite bearish on those. And soybeans, if you're following the grains, I think they've put in their rally. They're pretty much, I think they're done for the day. All right, you guys, we will see you again tomorrow, Friday, for our last trading session for June. We'll see you then. Bye for now.